Hi guys, and welcome back to Move Up with Mike at michaelglass.com. It is good to be back. It is good to be back. So let's get started. Of course, we always have to start off with our disclaimers. In short and simple, trade at your own risk. There's a chance of losing money. There's a chance of loss, no matter what form of investing you choose, stock, forex, future option. Anything we do here is for educational purposes. We're here to be successful together, but this is solely your own responsibility. Trade at your own risk. So let's take a look at what happened over this weekend. We're going to look at the economic calendar. We're going to pull up some charts and look at some of our futures and some of our FANG, our important stocks that move the market. And then we'll have a little educational spotlight at the end. If you guys remember, I always like to start off with a quote. So, never cut a tree down in the wintertime. Never make a negative decision in low time. Never make your most important decisions when you're in your worst moods. The storm will pass, the spring will come. So, in trading, you can't make emotional decisions. I always lose money when I make emotional decisions. Come up with a plan, trade your plan. Do not deviate from the plan. Do not make decisions when you're feeling low. That's when revenge trading happens, that's when emotional trading happens, and that's when you blow out your account. So, the week that was, is obviously yesterday, well not yesterday, Friday, the market was down. I was down over 950 points. Look at this volatility. NASDAQ down 290 points, and S&P fell 88 points. That's usually a week total in 2019. In 2020, that happens in a day. And you can see the Dow was down 25% for the year. Nasdaq's down 17%, and the S&P 500 is down 20%. 401k people, I'm praying for you. The big thing this week was the stimulus package that finally passed, and it's now gone through both chambers of the House. Senate early in the week went through the House yesterday. So even though yesterday was a down day, the market was up, I believe, the most since 1933 for the week. We still had a big gain for the week, but again, doesn't matter how much we're up for the week for our buy and holders, for our long-term hurdles, when we see that we're down, 20% just year to date. So the big thing was the stimulus package, and when that moved and passed, we did at least see some of the sustained selling pause. Now, that doesn't mean now that it's passed that I expect the market to rally back up to the highs. I don't think the market's really going to do anything until we're through, in some form, this virus stage. And as long as we're at stay at home, as long as people aren't working, the market cannot go up. But at least maybe the stimulus will at least stop the bleeding and maybe put in a bottom. But we'll talk about that later. I don't think there's any overseas news, although sometimes people do pay attention to what's going on in Italy. If they have more deaths, that does sometimes affect the market because that means their curve has not flattened, and if their curve's not flattened, our curve may not flatten. Of course, we have passed Italy, but when people say that, we're a bigger country than Italy, so we should pass Italy. And I mean that in the nicest, strictest, scientific way. Nothing political about that, and certainly, wish the best for those who are infected here in our country and abroad. But we are bigger than Italy. It shouldn't be a shock that we've caught up to Italy. What is a shock is the fact that our curve is just now. I heard, the governor of Cuomo or New York talk about their curve is starting to flatten a little bit. It went from doubling every 3 days, so I think they said every 5 days. So there is progress, which should help the market. But the big economic news was on Thursday, over 3 million people filed for unemployment insurance. That's impressive. If you go back to 2008, during the financial crisis, the housing crisis, the biggest number of unemployment insurance was 700,000. Just Thursday, we had 3 million. So going on into this week, what can move the market? We don't really have any earnings to be concerned about this week. We've got consumer confidence. I'm sure that's going to be low. The reason I say weekly jobless claim is obviously last Thursday we had 3 million. They're going to see, do we have 3 million again this week? That could move the market on the way. And the jobs number on Friday certainly if it's bad, could certainly hurt the market and move the market one way. But again, I'm a volatility trader. I like when the market's moving. That's when I want to trade. So let's go ahead and pull up some charts and take a look. Okay, so as we pull up the charts, we're going to start off with our futures market. So let's go ahead and start off with the S&P 500. And one of the first things I really want to point out to you guys is right here. You know, what happened Friday? The House passed the bill that the Senate passed, so the stimulus package passed. So you would think that's what this week move was. Over the weekend, they passed it, the Senate passed it, and we moved right on up. So why didn't this move up continue on Friday? Well, take the time to draw your trend lines. You will see that we had a downtrend line from the beginning of March, and we opened up, ran up to that downtrend line, and sold off. Doesn't mean that we won't continue. You can see some buying going around here at the evens, the 2400. But why did this happen? I always find it interesting. If you take the time to look at things in the macro level and look at things in the bigger picture, you can find out what to do on the intraday micro level. All right, so let's switch on over to gold. We know gold is basically an inverse of the market, of the indices. So, you know, gold has not been as bad as the S&P 500. But you can see a nice channel here going from 1450 all the way up to basically 1700. You can make a very good, strong argument that there's some support resistance going on here at the 1550-ish range. You can see some support right here. You can see there's resistance over here. So you can make an argument about that, but I'm looking at the the bigger swings. Why did we sell up hard right down and stop here? We basically did not honor that 1550, 1500. We didn't honor that. We went right through it, and we did stop at this 1450. So that's why I'm paying attention to that. So again, inverse relationship. If the markets are going to go up, we might see a pullback of gold, and you can see a move for gold. Maybe we will see a test down here, certainly to the 1515 level, if not all the way down to 1450. Now let's go to the big boy, crude. I should say big boy, not anymore. Again, those of you know, the Saudis are basically putting a run on the market and overwhelming the market with supply. And so in addition to the virus and low demand, Saudi got in a little argument with Russia, and that's what this whole move right here is. And they've basically been pushing the market down. Again, you can make an argument that we're basing here in the low 20s. We'll certainly see what happens here. We know in terms of the American producers or the shale people, or I don't know, the refineries, I've heard that $50 is the break even. And I've heard $40 is the break even. Either way, we're $20 below that. So these people are taking on debt. These people are underwater. And so they definitely certainly want to see oil go back up. When is that going to happen? I don't know. Again, with the low demand, we could see this start to stay here, at these low levels also until we move up. But until I really see something move up, I'm not going to draw a line down here, and I'm not going to go way back. We haven't been in these levels since 2017. And yeah, I know you can go back there and look at it, but I'd rather just kind of wait and let the market form a new support zone, supply zone, before I start drawing in the bottom. Certainly, this gap down is something to watch, and filling that gap is also something to watch. All right, so let's go to FANG. Let's start off with Facebook. So we're obviously in a downtrend line. So what's important, as we just talked about before, with the S&P 500. All right, there's our color. And let's kind of draw that down, and you can kind of see that same action. The came up, sold off from here. We know these big boys. What they do is what the market does. So we have to pay attention. So hopefully we will start to see some type of stabilization. But again, we can see this downtrend line that seems to be autumn right now, and we can get into this 180 level here as probably the bottom of this channel here. And so I would like to see us get up there and test that before I would say we're going back up into this channel. Again, 180 up to 210. Apple. We all know how much I love Apple. We have already violated this uptrend line that I was watching. Certainly where we're at right now matches with some of the drop downs. So before we really truly talk about retesting the highs, which we're, I'm not even trying to predict that, but what's important is before I can say, you got to draw your zones. And we need to get above 260, 255 to say that we're going to go back up and start testing these higher levels of 280. Until then, we're going to be down in these lower zones, 220 up into this 250 zone. We're going to be cycling through there until we can close above 255. Amazon. Amazon, even before the big sell-off, has established a nice range between 2040 and 1700-ish. Nice little range there. And then, we can see here's the lower half of that. Here's the top half of that. Right now, we're pausing into the upper half of this zone. So we can find support here and look to go up here and test the 2040. Netflix. Netflix is already in what I would say the upper half of the zone. You can see this gap up over here, or gap down, I'm sorry. And we are just below that. That's basically at the 360 level. Let's draw a horizontal line right there. So we are just below that. So if we close above that, we can kind of test the top of that channel, which is 390, 400. But until then, you can see really I wouldn't even say 330 to 360. I would really get down here to 320. And this little swing that we see right here, so if we don't hold above 360, we can possibly go down and test 300. And our last one we're going to look at is Google. Google looks more like the S&P 500. You can see that downtrend line. Switch back over to a trend line. Starting to form sideways. You can see it. We had a swing over here at about 1070, 1070. So I would look for us to consolidate sideways until we get a catalyst to move up above 1150. Okay, so as we come back from our charts to our PowerPoint, we want to talk about our spotlight for today. And I really want to talk about Top Step. There are several prop firms out there, and you guys know that I've been a proponent of Top Step. And so I really want to help you guys pass your Top Step combines. And so I'm going to put together a trading room where we just kind of focus on the rules, the risk management, the combine rules of Top Step to help you guys pass. So first, if you haven't signed up for Top Step, go to michaelglass.com/combine, and that will get you to their combines. And then if you go to this michaelglass.com/trading room, make sure you get the dash in trading room, and that will get you a sign up form where you can sign up to get a link from me to where I'm going to bring a bunch of people together, and then we're going to work on passing the combine. So, and you might say, well, why am I doing that? Well, let me show you why. Or maybe instead of why, you're saying, how can I help you? And so in all this volatility, I myself just went through the combine just to see if I could do it. It's been a while. So this is step 2. I did a 50K combine just to go through it. And you can see it took me basically 5 days to get there. Then once I got to the level to pass, I just opened and closed a trade just to get through the 10 days. So I did it in 10 days. So again, I want to help you guys do that. Let me also show you this. This is my dashboard, but it's not for step 2 to combine. Top Step has this new thing they call a pro account. And what you can do is, instead of going directly into a funded account, you can go into a pro account where they give you, you're still trading simulated. However, once you reach $5,000, they'll transfer that $5,000 to the funded account. And you can see here, it took me basically 3 days to get to that $5,000. So they are transferring that. And if I wanted to, I could close the account immediately and they will just give me the $5,000. But I thought about it, and why did I want to do this? And the reason is, when you go from simulation to, if you know anything about their scaling plan, by them putting in $5,000 into the account immediately, you're now through all the scaling plan. You can trade as many contracts as you want based upon whatever combine you're in. And more importantly, you now have some cash in the account that if you take a loss or two, you're not blowing out any accounts, or you're not feeling any stress, and it doesn't affect how many contracts you can use. So for me, and I wanted to take advantage of the volatility that's in the market now, which has a lot to do with passing that in 3 days. And I never really traded more than 3 contracts. So again, if we go back to the PowerPoint, 1 second, head on over to the website, sign up for the combine, sign up for the trading room. I will help you pass. So on our social media, you can basically find me under Move Up with Mike. Thanks, guys, and I will see you next time.